I believe Bitcoin is at an inflection point. Josh, have you seen this chart? I know you can see my screen right now, but
Yes, I can
this
see.
is this is pretty much what the bears are saying. I'm sure you've seen this before. We've talked about this chart before, right?
Yeah, that's pretty interesting. You know, a symmetrical triangle usually is a bearish pattern because the whole part of trading is knowing your odds. So it's always good to know: am I in a bearish continuation pattern? Am I in a bullish continuation pattern, or is it somewhere in the middle? Symmetrical triangles typically are bearish. That doesn't mean always, but they typically are.
So we are in a downtrend in the macro. So we could certainly make the case that this is a bearish continuation pattern. And I'm glad that you mentioned that, Josh. I'll actually draw out how similar both of these fractals are right now. What's very interesting about these two fractals is as we get close to the 50-day moving average, you can see we tried to come and test the 50-day and we didn't get there. And then we came for a second try.
Yeah. We're almost in the same amount of distance from the 50-day moving average where we are known to get rejected. So that is very interesting. And not only that, but there's another interesting thing I'll show in a little bit. And guys, make sure you watch this live stream all the way till the end and let us know in the comments if there's any questions you may have. But yeah, no, that's very interesting you say that. But you know what they say about how the market always does the opposite of what you think it's going to do, right? How many people, just leave it right there, Naeem. You see that channel at the upper left? You see how it touched the lower part of the channel right there? No, to the left? No, before that. Right there, yeah, exactly. So how many people thought that was the end of the world right there and that the shit was going to hit the fan and it was going to go down? Everyone thought it was going to dump at that point, right?
I
But
think you and I were in a short position.
it consolidated. Yeah, but what I'm saying is it pumped and it consolidated and then dumped.
Exactly. So the markets tend to do the exact opposite of what most people think. And I think that the reason we're seeing that bearish continuation pattern spread around is just how similar price action is right now. Just on the 6-hour institutional time frame, notice how the 50 period and 100 period moving average, as they start to converge, is really where price starts to tighten up. And that's actually where we ended up dumping. And so not only is this very similar to the consolidation from 30,000, but if we look at the equity markets, we're looking at the same exact picture here. A failure to test the 200 period moving average. You can see we never got to test the 200 period. Even right now, we haven't come up to test the 200 period. And when we start to see the convergence of the 50-day, or let's call this the 50 period and 100 period moving average, since this is the 6-hour chart, that's typically when we see that volatile move. And not only that, the reason I think this is an inflection point is if we pull up the Bollinger Bands, same exact deal, right? When you start to test the resistance of the Bollinger Band at 30,000, that second test ended up being the massive move to the downside. And right now we're at that exact area, testing this major resistance for a second time. And what is significant about today's daily candle snipers, for those that are tuned in here on our live stream, we see we've got Japlet and over 100 people on our live stream right now. What's very interesting, because we cover the 4-dimensional revolving parts, is with today's daily candle, if we look at Bitcoin against the SPY, we rejected the 200-week moving average. Why is this important? Well, we're going to look at the weekly candles today because they close in less than 2 hours. And so this tells me that Bitcoin is at an inflection point. The daily candle today was what allowed Bitcoin against the S&P 500 to test its 200-week moving average. And so this is extremely important to monitor with our new weekly candle, in my opinion, the Bitcoin against SPY chart. And to put the cherry on top, let's look at some altcoins. Ethereum testing a major resistance with the Ethereum to Bitcoin chart. If this was truly Bitcoin exhausting itself to the upside, then we got what we needed for Ethereum. That allowed the Ethereum to US dollar pairing to test its 2018 previous all-time high, which it broke when it was a support level, but didn't get to test that as resistance. This was the first time that we came up to test that as resistance, which means Garden variety market behavior says that this could be a final destination where we get rejected. That's why the previous weekly open is updated on my chart. And that's now very significant for Ethereum at 1165. Are we going to be seeing sideways price action into this week with some very light volume in the markets right now? We're going to talk about that today, but I think it's important to just keep this in mind. Bitcoin against the S&P 500 today, the daily candle intraday price action tested the 200-week moving average and got rejected so far. We haven't broke through the 200-week moving average. If we see Bitcoin break above 20,000, if it breaks above 21,600, then we invalidate Bitcoin against SPY being below the 200-week moving average, and maybe we can start talking about Bitcoin outperforming the S&P 500, but we haven't gotten that yet. So far, what it looks like and what we're taking as face value is the fact that we rejected the 200-week moving average for Bitcoin against the SPY. We have our new weekly candle, so we'll look at the weekly candles. But Ethereum and altcoins, not just Ethereum against Bitcoin, but even the altcoins outside of Ethereum, check this out. This previous support from this descending triangle is now being tested as resistance. And so I've been sending out a lot of trades for altcoins on the Discord over the last 2 weeks. We took a ton of altcoin long trades, and a lot of them have already hit 30% profit targets, 15% profit targets, 20% profit targets. So we've seen a major relief already in the overall market. That's very clear. And that's showing here with the Ethereum to Bitcoin chart and the altcoins outside of Ethereum testing a previous support as resistance right now. And Bitcoin is at an inflection point. Now, if we look at our weekly candle that's about to close, this weekly candle right now is free falling from the 200-week moving average, which means we have no price action, not even a wick to the 200-week moving average.
And it's a lower high, too, from the previous weekly candle, right? So what do lower highs typically indicate?
That the next weekly candle will have another lower high and that we're proceeding into a downtrend. But like you said, Josh, the markets do exactly the opposite of what everyone expects. So here's what I'll wrap it up with, and then I'll let Josh speak. And the last thing is VIX is also at an inflection point because we're testing the midpoint of this range. And so a lot of people are saying, oh, the volatility is down in the equity markets. Yeah, but that could change really quick if we don't break below this major level. So I'm going to be watching the VIX into this week. But here's the point. Right now, Bitcoin is at an inflection point. The bears are saying that we're going to copy the fractal from 30,000. And now we're seeing the final push to the upside before rejection. And the bears have all the reason to say that because altcoins have already seen the relief rallies. Ethereum tested a major resistance already. And so could we say that this scenario is potentially on the table now into this week, into the next 2 weeks? I think that 21,600 is extremely important right now. And it's not the exact number that's important, but it's the fact that we can get above the 200-week moving average for Bitcoin performing against the S&P 500, because then regardless of what the S&P 500 does, we can start talking about Bitcoin to 24,000, Bitcoin to 28,000, and start assuming Bitcoin has the chance to outperform the S&P 500. But until that happens, we can't make that case. So, what could we expect now with price action if the bears are all saying that that's it? We're going to copy this exact fractal. This was the second high, and then we roll over. Well, the major support right now, in my opinion, is the monthly open. I would not be calling major downside targets unless we breach back below 20,000 US dollars. Because I think that there is a potential that the bears get what they want, where they see some downside here. We break below the current weekly open, which is going to turn to the previous weekly open at 20,800. The bears get what they want. They get excited. They think this is it. They take their short positions, and then bam, like what do you know? Like what Josh said, the exact opposite happens from what everyone expects. And then maybe we finally come to test 24,200. I think that this is a scenario on the table. And for the bears, we reject 24,000 where we have the 50-day, and then maybe we see continued downside later down the road, unless we're going to be just seeing the rug get pulled here. 20,000 breaks. I think that's going to put Bitcoin in a very similar position to what happened here. But once again, we know a lot happened in this consolidation. We saw Three Arrows Capital, we saw Voyager, Celsius, all of them over leveraged, getting liquidated, becoming insolvent, and then that was actually a direct cause of what happened here with Luna becoming insolvent. And so fundamentally, we could say that there may be a relief rally here, but we certainly are at an inflection point. I think the next 24 to 48 hours are going to be the most crucial. And Jerome Powell doesn't speak until the end of this month. I think it's like July 26th or the 27th that Jerome Powell and the Feds will potentially announce interest rate hikes. People are saying that maybe the Feds are going to start leaning away from that 75-point interest rate hike and maybe come down to 50 points. If that happens, maybe we see a rally. Some are also saying that we might even see a 100-point interest rate hike, and that would obviously be detrimental to the markets. But people are now on the lower end from what I'm seeing because of the fact that U.S. oil came down for the first time in the CPI report for 2022, and usually that's a leading indicator that overall inflation is going to start coming down. And so there's a lot of talk back and forth, but what we do know is that's in the end of the month. So what's going to happen until then? I think with light volume, one of the rules that we always talk about here on the Snipers channel, and we're not going to look at the Binance chart for the volume because of how manipulated it is now. We'll look at Coinbase. With light volume, the path of least resistance is always going to be sideways to a little bit higher, right? And so I think that in the best case, if we do break above 21,600, it makes 17,600 look more like a real bottom. And then we can talk about 24,000 as that next potential resistance level. And then from there, we evaluate the situation. The markets are dynamic. We look at volume. We look at, do we have the potential to even break above 24,000? So I think that that's certainly on the table. But this is an inflection point, right? All of this could change if Bitcoin crosses back below that $20,000 level where we have the monthly open. That's what's going to be a big concern if it happens. And so I think that we just have to continue to monitor what happens with equity markets. Futures markets just opened up. We know the DXY has been rallying over the last few days, and our last weekly candle was breaking multi-decade highs. And so I'd love to hear your thoughts, Josh, on what's going on. But that's pretty much where I'm at with where Bitcoin is right now in terms of being at an inflection point. And we could sit here and talk about different bullish cases to make, like, maybe the equity markets are ready for some sort of a relief. We can look at all the fundamentals. But what we do know is this: Bitcoin is stuck here at 21,000 US dollars. It has a potential upside target of 24,000 in the immediate short term. We know there's also a CME gap up around 28,000 US dollars. So we could potentially, if we break above 21,600, we could potentially put this on the table where we come all the way up to 28,000, and all it's going to take is 21,600 because that puts Bitcoin in a position to outperform the S&P 500. But if we don't see that anytime soon in the immediate short term, the next 48 hours, in the next 72 hours, we start to roll over back into the low 20,000s, I think that we're getting what we're seeing here at face value, and that's the fact that Bitcoin is rejecting the 200-week moving average against Bitcoin against the SPY. Bitcoin's new weekly candle is going to be fully below the 200-week moving average for a second week. And now we start zooming out, because when in doubt, you zoom out. And then we have to look at where the 100-month moving average is sitting. Because if the 200-week isn't going to hold, then we have to look at that 100-month, right? And that's the only next level of support. And you can also see so far, it looks like this weekly candle is going to close us below the 50-month moving average. And so, that's why I think it's an inflection point. I think we could really see a move here. There is something positive to talk about. Look at the moon phases. I know we talk about this sometimes, Josh. Ever since we got the new moon here, we've seen green daily candles. So, depending on how this candle closes in less than an hour, we've only seen green since this new moon. Have we seen a shift in the psychology of the markets? Do people think this is the bottom? Let's see. I would have more confidence that Bitcoin has more upside left if Ethereum didn't already come to test 1440. We called this out when Ethereum was sitting here at 1165. We knew that this was the third round it was going to come up to test 1277. And if Ethereum didn't already test 1440, I would have a little bit more confidence and more upside for Bitcoin. But all it took was for Bitcoin to get above 21,600 for Ethereum to go up, on this daily candle, 20% on this daily candle to test this major resistance. Talk about a short squeeze, talk about a relief rally there. It looks like that exhausted itself right off the bat, right? It's like all cards were dealt right there. And so, like I said, this is an inflection point in my opinion. Ethereum to Bitcoin testing this major resistance and so forth. So,
Wow.
what are your thoughts, Josh?
It looks like Ethereum topped out, doesn't it? So here's the thing that Naeem taught me today, guys, is that Ethereum can also be a leading indicator for Bitcoin. As much as we know and believe Ethereum to follow Bitcoin, we can also look to Ethereum to, lead Bitcoin in certain situations. And the fact that Ethereum got rejected, doesn't leave it off the table right now for Bitcoin. I mean, just look at that daily candle. It certainly looks like we're getting rejected. And we're right within that Goldilocks area of the, in my case, the spider line, his, horizontal line. It's really all the same stuff. It's just the best confluence areas. But yeah, 100%. Ethereum definitely looks like it, but here's the other thing. It also looks like it's testing that moving average as support now.
The 50-day. Well, it's funny you say that Ethereum could be a leading indicator. Ethereum broke its 2018 previous all-time high on June 13th, and it took Bitcoin until June 18th to break its 2018 previous all-time high. So far, in the immediate short term for this consolidation, Ethereum has been a leading indicator. And yeah, so far right now, you could say that we are holding the 50-day moving average. Josh, do you want to share your screen and talk a little bit about those spider lines that you're talking about?
100%. So I was telling Naeem today, I was like, I don't even feel like getting into I guess I could just put it right here. I told him, I was like, I don't even feel like getting into a short position because of the fact that we didn't come up and touch this spider line. And, for me, it's kind of like having a CME gap up above you that you need to fill. And it didn't get filled. And so for me, that's what was, kind of holding me back. But yeah, as soon as we reach around this area, because here's the thing, sometimes you don't have to hit it exactly, just within that force field, right? So essentially, I think there is room right now for the downside, and that what Naeem described, a bounce off the monthly open going upwards, that could definitely happen. Or we could have, what happened with the fractal that you were describing, which happened above, So interesting thing is that, yeah, we have a bullish weekly candle. Let me look at everything. So I'm not going to be 100% bullish until, in fact, let's see, you have those moving averages, right? So that's smart. So my whole thing is, guys, I'm not going to be super bullish until we're able to break away from this red line. So that's just me personally. You guys do whatever you want. I think there is room, though, however, right now for the upside. I think there's room for the downside, but it just depends on what your strategy is, right? So we are getting rejected off that monthly moving average. That is very important. Let's go take a look at the 2-day chart. So yeah, when we analyze the 2 days, we're kind of staying within that channel of these spider lines. And it definitely looks pretty nasty. I mean, like, look at the wick right here on the 2-day. Last time we had a wick like that was right here, and then look what happened. It just dumped all the way back down. So the fact that we're seeing these wicks and it's not even making it to, I mean, we could possibly be getting exhausted. That's just the reality of everything. We could be getting exhausted, the bulls. Let's take a look at the 3-hour. So yeah, I'm not liking what I'm seeing, basically. We're seeing buy volume become exhausting. Let's take a look at the 1-hour. Yeah, see what I mean? It's not even able to climb up above the daily open. I mean, even on the 1-hour, we have this candle wick. We were only able to wick above the daily open. We weren't even able to have a 1-hourly candle close above the daily open. And so we tested that as resistance, and we continue to test it as resistance. Now, the interesting thing about this is that we're being currently held up. Let me get rid of these moving averages real quick. we're currently being held up and supported by the weekly open. So the moment that we are able to break to the downside of the weekly open, then I think potentially we could come all the way back down to, really the $20,000 range, which would be somewhere around the monthly open. Maybe even more, right?
That's what I always say. I always, it's something I always do for the snipers that are tuned into our channel. Smash the like button for the YouTube algorithm and subscribe to Josh's channel if you've yet to do so. By the way, the link is below. The thing I always tell the snipers is, we want the earliest confirmation, right? And so what you're saying, Josh, is very valid. If we break below 20,800, which is the weekly open, that could be an early confirmation that we could be seeing Bitcoin even come below 20,000, right? I mean, it would really start to play out that fractal.
Exactly. If it plays out that fractal, I'm going to be rich. I just say richer. But no, it's only because we're hardworking people around here, guys. We've been in business a long time and crypto a long time. And do they see your screen or mine right now?
They see your screen right now.
Okay. Yeah, I was just going to say, that's basically all I had to say. The other thing is that we're having a cup of coffee right now below the volume weighted average price, which is the most important day trading indicator as far as moving averages, just on the intraday time frames. And so the whole thing is there's a lot of confluence right now between the volume weighted average price and the daily open. And so for Bitcoin to come, we could even come back up and retest the daily open as resistance, and that would still be considered bearish because we're consistently making these lower highs. The last thing I want to talk about, we already covered last time about some things on the DXY, but I'm just continuing to monitor the DXY, specifically this line that we have drawn here. The reason why it looks like I cut into it so much is because on the higher time frames, like say the 4 hour or whatever, or even just the 1 hour, it just lines up better, right? So that's kind of why I'm doing it like that. That's just where the most confluence is. But what I'm really looking at right now is the DXY, because that is also, wow, it's actually below. Look at this. It's actually dropping below the daily weekly open. Isn't that interesting? Where it was being held up as support, it's now dipping below it. So it's interesting right now. We're seeing Bitcoin go down. We're seeing the DXY go down. And it's usually they're inverse of each other. But right now, that's just not the case. So I think right here, we could definitely come back up on the DXY and test, around the 108 area before continuing to the downside. Or if we see a breakout above this specific line drawn right here at the same area around the 108 zone, you always like to draw it. I think that works good too, kind of around this area right here. If we have a breakout, then that would be, when we could see some real further downside for Bitcoin. Because the more bullish the DXY is, typically the lower the asset goes. But we are at a weird time right now where the DXY is looking bearish and Bitcoin's looking bearish. So what do you think about that, Naeem? Let me turn it back over to you real quick. But what do you think about that? How they're usually inverse of each other, but as of recently, there's been several times where they were kind of moving in sync.
Well, firstly, thank you so much, Josh, for the analysis. That was incredible. I'm really glad that you mentioned the DXY. I'll piggyback off of you. The DXY, I'm also monitoring closely, and I'm monitoring it closely because we're trying to see where this is going to cool off. It broke a major resistance at 106.56, and that was a multi-decade long resistance level. And so it's pretty easy to say that the DXY right now isn't price discovery. And it's also pretty easy to say that it's in an early stage of price discovery based on the way these moving averages are going. Look at this weekly chart, how we're just now seeing some of these short-term weekly moving averages cross over these long-term moving averages. So, I mean, to me, I would say that, I've been watching the DXY. It's hard to to call a destination until we start to see some sort of a reaction to the downside. We haven't seen that yet. I'm sure that it would be very clearly shown here with the hike in a sheet candles. If we just look at the monthly for the DXY on the hike in a sheet, I mean, look at that. I mean, we haven't had one red candle since July of 2021 for the DXY. And so for me to call a top here for the DXY, I would be monitoring the hike in a sheet on the monthly and at least show me one red monthly candle. And then, maybe I'll start talking about a potential destination being reached for the DXY. But so far, there's very clear bullish momentum here. In the past, it has been quite tough to determine the destination of the DXY when all you see is strength, right? I think a lot of this could be because of maybe some sort of liquidity crisis amongst institutions. I hear a lot right now with VCs and private family funds that, it's a bit tougher right now to get higher valuations. That's why you're not seeing many IPOs right now. So I would say that there certainly could be a liquidity crisis upon us. I want to bring everyone back to what happened in 2008 because there's something very similar happening right now that I want to mention. And when I say similar, I'm talking in July of 2008 is when we saw oil top out after a massive rally to the upside. For those that were around in 2008, you remember this. It wasn't until June and then July was when we rolled over here. And then this is what people call the great financial crisis, right? And so from July all the way down to around December of 2008, oil saw a massive drop. And this is when everyone started to realize that a recession was here. And very similar to what we're seeing right now, as people have now come to realize that maybe we are in a recession, around the same time frame. And it's a little bit of it's not as exuberant of an uptrend here for oil because obviously demand has waned off. I think in 2018 is when we've seen peak demand for oil. Since then, we've only seen demand wane off, and that's expected to continue to wane off as EVs come into play. And so oil is just not as strong of an asset anymore. And so that's why, it's not as aggressive. But what's similar to me is this January to July run up in oil, and now people are starting to talk about a recession. Recession's here, whatever it might be. And so does that mean that's another 6 months before we see oil bottom out? And if that's the case, what's going to happen to Bitcoin? I think you said this on the phone today, Josh. Bitcoin's never been through a recession the way that we're seeing it right now, right? And and so if you look at equity markets, that's the closest we could get to Bitcoin right now. As we know, equities are correlated with Bitcoin in many degrees. What we saw from July of 08 as that oil price started to come down was equities also took their final dip in their bear market. And it didn't stop until March of 2009. And so, as oil started to peak out, we can just take a measurement here. Equities had about 45% more downside left. And that was after already seeing, a nice 25% push to the downside from the start of that year in 2008. And so, if we look at right now to where we're at, very similar, right? 25%. Isn't that crazy? And so are we looking at the same picture here where 25%, but that doesn't mean anything? We see another 45%, and then maybe we double bottom or form a lower low from the COVID lows. And why is the S&P 500 so important? Because this is the largest market in the world, worth trillions of dollars, and many people have their retirement in a total stock market index fund. And so this is what will really affect people. This is where people will feel it. So is this what we're looking at? And this would be the bottom for Bitcoin? I don't know. I'm just drawing on a chart here, and I'm just a regular Joe, So, I'd love to hear your thoughts in the comments in the chat. But Omar says the top analysts are saying Bitcoin's going to 12,000 to 13,000. Yeah, I understand that that's where there's a lot of volume. If we pull up the VPVR, and there's a lot of things to say that Bitcoin is coming down to this range. As a matter of fact, Bitcoin against the money supply is already trading at around 10,000 US dollars, whatever you want to call it, right? When we look at the equivalent to the money supply, you can see Bitcoin tested this previous resistance when Bitcoin was around $14,000. So you could say Bitcoin's already at, $11,000 to $14,000 when it's against the money supply. So bears are, they're going to argue this, but then the bulls also have something to talk back with. And that's the fact that, we're already there against the money supply, and that's all that matters, right? I mean, at least to Michael Saylor, that's all that matters, right? So if the money supply against Bitcoin, it's already at that price, and it's not just that, we could also argue that, okay, 10,000 might be on the table, but it ain't going to come with a nice knife down, right? We're not just going to slice through. Maybe we see 38,000 and then sideways price. I mean, it's not about what the analysts are calling for, right? Because it's really about the immediate short term. Markets are extremely dynamic. We saw that during what happened in March of 2020. So it's important to know what's happening right now, because every single day it could change. If we start to see interest rate hikes that are less than expected, that could be positive news for the market. So I think those are all interesting things. Smash the like button for the YouTube algorithm snipers. I see we've got our peak amount of viewers here. And remember to subscribe to Josh's channel if you've yet to do so. His video with Mike Tyson that he did a week ago at his house just went viral, so that was awesome. So immediate short term, let's look at it, right? So Bitcoin's inside of a range with a resistance that we haven't even gotten to test yet at 24,000.
So real quick, Naeem, do you think we're looking at that institutional time frame you have pulled up right there? Look at that 6 hour. Look how bearish that looks in the immediate short term. Do you think that 6 hour looks like we're losing steam?
This is what this 6 hour candle tells me. Because there's no wick to the upside, it tells me that over the next 12 to, let's say, 24 hours, we're going to see candles try to stair step their way back and try to fill in this candle. But I wouldn't call this a rejection just yet. I also wouldn't, I would say this. If we break below the weekly open, like you said, 20,800, then that would be a break of this uptrend. I think that's the conference. So this was pretty violent. I mean, this was not, the type of 6 hour candle that you wanted to see when Bitcoin was at an inflection point, right?
I think it looks to me like it's bearish in the immediate short term. Does it look bearish to you, or does it look?
It's
I know you're a macro bull, but the price in reality it goes up and down before it goes up high. But what I'm saying is, what do you think?
Yeah, no. Here's where I'll show you. So here's a similar 6 hour candle, right? But it ended up being just a drop to an uptrend, right? So I see this 6 hour candle very very similar to this one here. I think it's super undecided right now. I think that makes sense. I will say this though, there is a bearish bias in the fact that the S&P 500, I know futures just opened up, but it's below its weekly open, and it's weekly open from last week.
Exactly.
Yeah, so I would say that Bitcoin does have the chance to break below the weekly open, certainly. I mean, our last weekly open for the SPY was 3,900, and so if we just put that on the chart, we closed the week below the weekly open. So you can see, we closed much and below that weekly open. So this is the equivalent of 20,800 for Bitcoin. If we're just looking at it against the SPY, right? So I would say that there's a very high chance right now that we do come below 20,800, but I wouldn't want to see that happen because that brings back this fractal from 30,000, and it says that we're going to just see a massive push down. And I think that's why we're at an inflection point. It worries me. Here's what I'll say, Josh. It does worry me that we're rejecting the 200-week moving average on Bitcoin against the SPY, because this is what, as a bull, macro bull, I was hoping to see Bitcoin get above the 200-week moving average against the SPY, but it rejected it today. And not only did it reject it, but along with that rejection came the Ethereum to Bitcoin chart testing its major resistance at 65,000 Satoshis, which I don't think it's going to break above in the immediate short term. I understand the merge is now in September, blah, 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 but this is a major resistance. I do expect this to come down. Ethereum to US dollar, it exhausted all of its cards. All I was expecting at a minimum was to test 1440. As a matter of fact, I thought that was a little bit too much to ask for, but we already got it. And that all came with Bitcoin rejecting Bitcoin against SPY. So to me, there was a short squeeze, $150 million of shorts liquidated. There's a chance right now that we could see an all-out dump here for Bitcoin. I would say that if we break below 20,000, it becomes extremely likely. But the one but here is
the MACD 3-day crossover.
I forgot to mention that. So we have the.
What were you gonna mention first, though? Before you mentioned that,
you know what? I'm gonna run with this one, man. You know, as a bull, you know, you've got the 3-day MACD.
As a bull, right?
You've got the 3-day MACD.
How wrecked would that have gotten you during this last bear market? As a bull, comma, ... I'm just kidding, guys.
No, I see what you're saying.
No, what I am saying though is, like, you got to be silly to not hold spot positions of Bitcoin just for the future, right? That's just obvious because it's a bullish asset. We're just going through some turbulent times right now. We want to make sure everyone's, prepared.
I'll say this about the 3-day MACD crossover. So the last time we had one, it actually didn't result in anything significant other than a consolidation. And it lasted around 87 days before we saw it break the consolidation low. So let's say this is a 3-day bullish MACD crossover, but it's still in a bearish macro trend. Let's assume 80 days from when that occurred. I mean, we're talking Bitcoin ranging around 20,000 until October. You know? So I'm glad you mentioned that. I mean, if this is a bullish MACD crossover, that means that Bitcoin's going to range around 20,000 until October, and then see maybe the 10,000, 13,000, whatever it might be. I mean, when I say range, I'm talking about this, this range, 24,000 to 17,000. Because we know there are people that are in long and short positions inside of this range. I mean, it's getting exhausted.
Yeah.
We're going to see liquidations at some point or another.
So that means volatile move in one direction, one way or the other.
Yeah.
And speaking of liquidations, did you tell them about the current amount of shorts that just got liquidated?
So we had 150 million just in Ethereum, but we haven't seen Bitcoin shorts get liquidated yet. And so that might be...
Oh, that's an Ethereum. Wow.
Yeah, but, Ethereum was a leading indicator for Bitcoin to break the all-time high, right? So Ethereum broke it on June 13th. Bitcoin broke the 2018 all-time high or July 18th. So it was a 5-day delay. So what if the markets do exactly the opposite of what everyone expects, and as everyone's expecting it to come down, Bitcoin does what Ethereum did, and it comes up and tests your spider line and my resistance at 24,000. And now we get the headlines, $300 million of Bitcoin shorts liquidated, and then maybe we roll over from there. I think that is probably the most likely
that would
scenario.
throw everybody off.
Yeah, I mean, that's
right now, everybody's short.
Omar says, Florida attorney, I think you're right. Well, we can't have a state case. We have to make a federal case here. So I don't know if there's a federal case to make that Bitcoin's going to dump here, but there's certainly we can make a wide variety of state cases. But this daily candle, this would be the first red daily candle on a new moon, Josh. So is that a reversal in trend? I think it's an inflection point. It really is.
And look at that wick on the daily candle. Like last time, yeah. Look at that wick on the daily.
Yeah.
And it got rejected at the same spot yesterday too. It looks like. So what is that? Technically, almost a double top. It's a little uneven, but it's basically almost like a double top. I mean, you could argue right now we have a triple
top, right here.
Yeah, 1, 2, 3. Yeah, I mean,
no, you're right.
Perfect, right?
Well, no, you're right, because if we take the bodies of these tops,
that's what I'm saying.
We weren't able exactly. If you take the
we couldn't even get a body close above it or even to touch it. So it's like therefore it's a losing. That shows me a sign of exhaustion. Speaking of exhaustion, we just dropped below the weekly open just now.
Did we? Are you in your short position?
If there's mostly bulls that watch your channel, then I don't. I'd rather not say. I'm just kidding, guys. I go long and short. I'm not, I'm not here to hide anything. I'm not a bear at all by any means, even though it may seem like it. I mean, we're in a bear market, but um, I'm a bull in a bull market. Let's put it that way.
Well, would you consider, if you were to take a short position here, would you consider one if we break with, let's say, a confirmation below the weekly open with a stop loss above the weekly open? What do you think about that short?
I mean, you could, but I wanted to front run it a little bit, and I waited for it to pump, and then I entered. So I'm already up 12%.
There you go. I mean,
I'm not using that much leverage. I'm actually up a little more than that. But yeah. So the whole thing is, and I just entered it not too long ago.
Oh man, look at that weekly candle. Oh no, look at that, man.
Doesn't know what it wants to do.
There's no body. There's literally no body.
There's no body at all.
There's no body.
Talk about indecisiveness.
Jeff says,
that's what Andrew Carnegie said. He said, indecision will kill more dreams than failure ever will.
I love that, man.
That candle looks pretty undecided to me.
Well, this is definitely going to close as a bearish daily candle if we continue below this $20,800 level. So that puts that monthly open.
Yeah, if we break that weekly open, we're going down. Like it's due for some downtime.
Here's the thing. This is why I started the video off saying this is an inflection point. If this daily candle closes this bearish, just look at it against Bitcoin against SPY. This is the 200-week moving average right here. Like, how much more bearish could this get? Literally a rejection of the 200. We could even get above it. Just a plain old rejection.
Couldn't even get above.
Yeah, I mean, look at this daily.
It was rejected like me in high school. Rejected like me in high school. No, I'm just kidding.
Jeff on the chat says Feds are about to raise rates 100 BPS. I wouldn't say that, Jeff, because if you really study some very smart analysts and economists right now, a lot of them are saying that in the CPI report, U.S. oil was down for the first time in 2022, and that's the first sign of inflation easing off. And so there very well could be actually a 50 BPS rate hike. As a matter of fact, there's a Fed pivot indicator. I think I sent this to you, Josh, where the Feds actually don't have much more room to raise rates. It takes like the GDP multiplied by, the debt of, it's just just Google it, the Fed pivot indicator. And they just can't raise rates, the way you might think they could. So 100 is actually what economists are not expecting at this point. They're actually expecting possibly a 50 BPS interest rate hike. Kathy Wood's also expecting the same thing. She thinks that the Feds are going to pivot soon. Would that be the catalyst for the market? Would that be the bottom for the market? I think that's what people are betting on right now. I think 17.6 could be that short-term bottom. Let's say we do get 50 BPS and not 75 or 100. Maybe that's it. Bitcoin rallies up, and then we'll wait another 6 months to 12 months to see how the economy is, to determine whether we're ready for another push-up, right? So I think that, there's certainly a case to make. What Josh and I want to make very clear on this video right now is this is certainly not a range, I think, to be entering into either a long or a short, because I think we're going to get some headlines of liquidations here really soon. We're tightening up quite a bit on the Bollinger Bands. Josh and I, we've been live streaming every single day through this consolidation, and we've taken trades every single day. This is the first day that we're saying, hey, might want to go outside. It's just, this is a very tough range. And Josh and I may end up entering a short or a long at some point here. But right now, I would say that things are tightening up.
Bands, wow. Dude, that's volumes. Look what happened last time we were in that same setup as the Bollinger Bands. Holy shit. And I am in the short right now. But Naeem doesn't like to short Bitcoin. He likes to short altcoins. So maybe we'll be able to talk more about some altcoins that he likes, and maybe some altcoins that are pumping too.
Yeah, I honestly, over the last 2 weeks, I've taken more long positions than short positions on altcoins, and that actually turned out well. We did take some short positions, but let's say over the last 48 hours, we did take some longs. And that turned out really well. We saw a major relief rally today. If you looked at Ethereum Classic, it was up 14% for the day. But that's kind of what I was saying earlier. It's the fact that, you know, this is kind of not bullish in a way, because, you know, you expect altcoins to have a relief rally in a bear market. And sometimes you could use that as an indicator of how much more fuel Bitcoin has left for its upside move. But when Bitcoin goes above 21,000 and everything just shoots up, it's like, okay, like, is that all Bitcoin had? Right? All the cards were just dealt right off the table. Ethereum Classic, just in the last 2 days, up 42%, right? So, you know, I did take note of that a lot of long positions that we were taking did hit their profits. But, you know, we've seen even more extended rallies, though, in bear markets. You can see here there's a quite extended rally. So that could happen. I think, you know, that, Josh, you were saying this on the phone today. You were like, man, as much as things look bearish, you know, there's that rule that the markets do completely the opposite of what traders expect. And I think this couldn't be a better example of that. You know, I will mention this, S&P 500, it did close with a, you know, a daily bullish continuation candle on Friday. So that could give us some hope into this week. What we really want to see here is a break of this downtrend, these lower highs. You know, that would be a nice confirmation. That would also show confluence with the 6-hour chart finally trying to get towards this 200 period moving average, which so far we haven't been able to test. We've only rejected. And same with Bitcoin. You can see we never get to the 200 period moving average. We just reject it. And so I think that's one early sign to monitor, but we'll see. We'll see.
And then also, like, we're having a cup of coffee below the volume weighted average price.
On the 7-minute?
I mean, I think the VWAP is the same on every time frame. Just double check. 21,200. Yeah, the volume weighted average price is the same on every time frame. I think it just resets every single day. But it does fluctuate though. Like, it will start to come down like a regular moving average.
Yeah, the lower time frames look bearish, man. I mean, into this close.
We are getting another bounce off the weekly open right now. So, like, this is our last glimmering hope of support.
No volume.
Oh shit! No volume.
Yeah, it's
oh, no.
infected with sellers.
Man.
I don't see buyers here, but it's low volume.
There we go. Bounce bears. It just feels so weird to, like, be in a short. You know, it just almost doesn't even feel right to me. But we are in one hell of a bear market.
Well, if we learned one thing from Ethereum is the shorts felt a lot of pain with that pump.
We're only short on derivatives. Yeah. We're not really affecting the price.
Charles says, missing the elk blanket background. I miss it too. Wall Street Journal just announced a potential 75 basis point hike.
Wow. So that means it's going to dump, right?
Well, based on this daily candle, you know, it looks like it's throwing the price down below this weekly open, and it's only going to open up worse, because this is what I would call a top. I mean, based on candle symmetry, if we close with this wick and this body just pointed, I mean, look at that. You know, it's just.
Oh man. Should I buy a new Ferrari right now? This thing. Give us the number one in the chat. We should use the profits from this short to buy a new Ferrari. Give us a number 2 if it's a Lamborghini. No, we're not doing $1 million trades right now. We're only doing like 100,000, couple 100,000. It's just in this market, guys. It is you do not want to mess around. I mean, right now, right? Like, I'm literally trading this stuff right now, and we're up, you know, almost 18%. I don't know if you guys can see that or not. I can try to zoom in. It's strange because I'm on my laptop, but we're making some money right now, guys. And maybe what we'll do is send out a trade signal or something. I don't know. We just broke below the weekly open, man. We're tanking it. Yeah. I feel bad for all the people going long.
We might as well just have a watch party, huh? See what if we just slice right through 20,000 here?
I mean, I could live stream my position right now, but I'd have to connect to my VPN, might screw up the thing.
I'll teach you how to do that. I'll teach you how to live stream soon.
For sure.
One step at a time. But if you guys want to watch some of Josh's new videos, he just posted some new videos, so you can watch that. Link is below. I think we'll wrap up here soon. James Dean says 1. Marlon says 1. Nobody wants the Lamborghini, I guess. Maybe we'll start. Josh and I were talking about doing a Discord live chat after some of these, and also potentially doing giveaways and just having a little bit of fun during the bear market. I mean, if you guys want more of that, give us your thoughts. But we're definitely having some fun in the bear market. We can't take things too seriously. It's like Josh said, it's never a bad time to dollar cost average. We know that. This could be what
I was gonna say. I might hold this position all the way to 10,000. I'm just kidding. What were you gonna say then?
Well, I wonder where this is gonna take us. I mean, what are we talking about? Less than 30 minutes for this new weekly candle.
Oh yeah.
We'll look at the weekly chart.
So there's a new weekly candle opening, huh?
There is a new weekly candle.
The last one was bullish. Now it's time for bear action.
Look at that. Look at that fractal, man. I didn't even touch it. I didn't even edit it.
Man. So I guess I really am leaving this open all the way down to 10,000. I was just joking. I didn't think it was actually going to come true, but
I said we were at an inflection point.
I really will be buying a new car.
Oh my gosh. Look at this, man. That's why. That's what's happening right now. The Bears are really counting on this fractal. Man. Oh god.
Well, you have to be like Paul Revere and warn everyone, Sometimes you just got to warn everybody.
I love it. Well, we're going to wrap up. Thank you all for tuning in. Japlet says you guys are absolutely killing it. Thank you so much. We appreciate each and every one of you guys. We'll start having more fun, maybe do live chats with you guys in the Discord. Remember to subscribe to Josh's YouTube channel and smash the like button before you guys exit the stream. And we appreciate all of you guys watching the replay. And we'll see what happens with Bitcoin at an inflection point. Until next time, snipers